Hey, what is going on, Bulls and Bears YouTube family? It is Sunday, February 6th, 2022. We have a lot of financial, economic news to get caught up on today. Thank you for being here. Before we get started, please make sure that you are subscribed and that you hit the notification bell so you get alerted to the latest videos. Also, one other quick announcement. A couple people are asking me why I say YouTube family. That's because I'm not on any other platforms right now. I just don't have the time to upload to any other platforms. Right now, it's just YouTube. Maybe if my views keep dropping, I'll have to, branch out a little bit. But right now, I just don't have the time. So it's just YouTube for now. If someone is saying their bull boom on some other platform, any of these other like WhatsApp, I'm not on those platforms. The only other place I'm on is Twitter. I don't post there very often. I pretty much just use that for looking for news and stuff like that to bring more information to you guys here and my audience here. All right, so just wanted to put that out there because there's been people impersonating me down in comments with my logo and everything, telling you, some people here watching, to go to this platform or follow me. It's not me. If there is some place to find me, I'll let you know here face to face, not down in comments or something like that. Now, real quick here, let's talk about the storms that have been happening. People often ask me why I don't move out of California. There's a lot of things here in California that I would like to get away from, especially when it comes to finances and the cost of living. But look what's happening. Thousands of people lost their power now. You're not safe in Texas. Look at the tornadoes that happened in Tennessee and Kentucky. Up to 17 inches of snow and ice in New York State, Vermont, Indiana, Maine. 87,000 people without power in Tennessee. 56,000 without power in New York. The icy roads, the travel, just very dangerous. New Hampshire, state police reported 72 crashes just Friday alone. Memphis, Tennessee, a 15 vehicle pileup. So what I'm getting at here is that the grass is not always greener. There's a lot of things, again, here in California. The homelessness problem, the filth, the trash, the expenses, the cost of living. We have some of the highest electricity here in San Diego County, some of the highest in the country from what I've read. The gas prices here are ridiculous. And who knows, maybe in a few months I'll be reporting that there's fires in my neighborhood. You just never know. But there's a lot of things you have to weigh out when you think about where you're going to live. And, these people that woke up without power, I hope they have a way to keep warm in these sub-zero temperatures, right? So with every place you're looking to move or relocate or live, you have to weigh out everything. And things like this can really make you second guess where you want to live and where you're going to move to. All right, let's get into the markets here and some other financial economic news here. But next, a 1-year chart here of the Dow Jones. Now, even if you're not invested in the stock market, I think it's very important to watch the markets because the markets can give you an indicator of what's to happen. We saw the big drop in 2020, and before the big drop, we noticed a trend change, and we're starting to see something on this chart right here. I want you to take a look. And we see the uptrend, of course. We see dips, but then it goes on to new highs, dip, but then on to more higher levels, dip, and not so much of a higher level here just over the past month or two. But now, where are we headed? Do we see something here to the far right that indicates that this is a topping pattern? All right, this market's completely manipulated. Funny money being pumped to infinity. They could bring this thing up to 70,000 Dow Jones if they want to. All right, so I'm not here predicting what's going to happen, but we can look for trends, look at charts, look at data, and try to figure out what's ahead. And when big money starts selling, there's a good chance that they know something is happening. Now, on that topic, let's talk about some stocks that took some real big hits just in the past few weeks and months. And start here with Facebook, now under a new name. But take a look. This stock went up as high as $378, and now we're down in about the $230 range. and actually it got over 380, so that's a pretty big drop. And you think it was just a coincidence that we saw a lot of these CEOs and upper level people at these companies selling a lot of stock? Well, no, it's not just a coincidence. This is how the game is played, folks. So the people that knew that there's going to be the news that's coming out with bad earnings or whatever the trigger is for that stock to go down, you can bet that a lot of people knew in advance before the news made it to the public that it was time to sell. While the average Joe investor that was invested in the stock likely just held the bag all the way down. Now, will they pump it back up? Sure, if the big money decides to get in and pump it back up. Then they can wait for the next point where they're going to put out some bad news, and then they'll sell, and they'll come back in and buy, rinse and repeat. So this is how it works. For those people that think that there's not people out there doing this in the markets, I mean, you really don't know how things work in the markets. Just go back and watch a movie called The Big Short that came out after the financial crisis, and that'll give you a glimpse of some pretty accurate stuff that happens in the markets and with traders. Next, Peloton. Peloton was the darling of the pandemic economy, where so many people were going home, working from home, and therefore exercising from home. A massive number of gyms were closed. Some of them closed permanently, never opened back up. But look what happened to the stock. It was the darling of the work-at-home economy, got up to over 160, and now a plunge all the way down to $24 a share. Can you imagine buying up near the peak and holding the bag all the way down to $24 from over 160? Just painful. So are these stocks, there's a lot of other tech stocks that have taken big drops, and are these stocks indicators of bigger things to come in the markets and therefore in the economy? Right, again, it's very important. Even if you're not in the markets yourself, you can watch the markets and see what big money is doing. When big money starts to bail, then you know something is likely on the horizon that they may already know that just hasn't been made public yet. That's how the game's played. Next, mortgage rates. We know that we need to look at the 10-year yield, and let's take a look at what happened. 1.93, that's a big spike up from the previous level. Take a look at this. We saw this big spike just in the last trading day up to 1.93. And if you've been on this channel, you know that this is going to give us an indicator of where mortgage rates are going to go. So when we see this, we can probably guess that mortgage rates are also jumping up. Let's take a look at mortgage rates. Out of Wall Street right here, rough day in the bond market. Treasury yield spike. 30-year mortgage rate nears 4%. So what's going to happen in the housing market? Will institutional money come in and buy more homes once people are forced to sell their home because they can no longer keep up with the rising costs? Okay, the housing market, it's a monster that we like to keep an eye on here. And we'll keep you updated. We've got some inventory news and some pricing news coming out here in a report. Should be coming up with that one in the next few days. Next, let's talk about this recent article that came out at MarketWatch. I retired at 50, went back to work at 53, and then a medical issue left me jobless. There's no such thing as a safe amount of money, especially now with these rising costs of living, rising prices everywhere. People are more often now than before coming out of retirement because they found out that the nest egg that they thought was going to be a good amount of savings is not even close to lasting them throughout retirement. You throw in an unexpected medical expense and you don't have the right health insurance, look out, because it could get very, very difficult to stay in retirement. So we're continuing to see this squeeze where the people at the top are getting richer than ever. We talked a couple reports ago about how yacht sales have broken new all-time records. We see these luxury purchases and the cost of very high-end real estate exploding. All right, but that very top tier continues to get richer. The bottom 90%, most of them, not everybody, but most of them are getting closer and closer to the edge financially. And the paycheck portion of the population is getting bigger and bigger and bigger. And this article sums it up pretty good. There's no such thing as a safe amount of money. We talked a few reports ago about people that hit it big and they become millionaires and they can't hold on to it. One, they spend foolishly. Two, they underestimate the amount that's going to be taken from them by their city and state and federal government. We talked about the Jeopardy winner a few reports ago. They got nailed for, I believe, over $600,000 in taxes. So this economy is pretty wild, folks, and the way it's being ran, it's getting harder and harder for the average working person to make it and to think about having a comfortable retirement. And also on the topic of the top 10% getting richer and richer and vastly expanding their wealth, here's a recent article here. Bonuses rain on Wall Street bankers in biggest payout in a decade. Not since the late 2000s, folks. That was the financial crisis, late 2000s, when lavish bonuses rained down before and after federal bailouts. Have pay packages in U.S. investment banks swelled as much as they have right now. Now, the recipients of these massive bonuses and payouts will tell you that this is what companies have to pay to keep them at the company, to what they call retain talent. Other people looking at this from the outside would tend to say this is nothing but a looting of the system and not much more than a massive wealth transfer scheme. I expect things to get much, much, much worse, but this is needed to wake people up, and we're going to have to go through some very, very difficult times as a country. And I think what we're seeing now is just the tip of the iceberg as they continue to inflate to infinity. The little guy, the working guy, is going to get squeezed harder and harder. So be prepared, folks. Continue stacking. Be cautious. Hope to see you down in the comments. What do you think about the situation where so many people are retiring and unretiring because of the cost of living? What do you think about the markets, the big plunge in some of these stocks? And do we see a topping pattern in the markets? Does big money know that something big is on the horizon? Maybe some bad news that no one's heard about yet that the insiders know, but most of us won't know until after it happens. But things are starting to feel like something big is coming very, very soon. Now, I don't make timeline predictions because, again, you cannot predict a manipulated market. I don't put out timelines, but we can look at all the news and kind of go with our gut feeling, our gut instinct. And I'm starting to feel very, very uneasy about what we're seeing. Please let me know what you think down in the comments. I hope you're all well. Big love. Thanks for being here. Appreciate your support. Bye for now, everybody. Peace.